Hello, welcome to Business Morning. It's a public holiday right here in Lagos, Nigeria. Most of the major markets are closed today, so it's a holiday shortened week, but tomorrow we'll commence with the markets. But let's get you top stories that set your agenda. We see the oil market, that's open today. Oil prices edged up earlier today. We see Brent holding up $71.76 a barrel, 0.20% up, and we see the issues there. Hurricane Francine, and we're seeing supply issues impacting prices. WTI crude, that's still sub $70 this morning, 0.30% up. So definitely the oil prices still short-term still look depressed at this point, but this should be good for pump prices. That's talking about fuel, but we're not seeing that right now. But let's look at we'll get to what's happening right there with PMS later on in the show. But let's get a check on how the Naira performed last week. The foreign exchange market started on a calm note, owing to the funds that were offered at elevated levels towards the end of trading. That was on Friday. So we see a jump there, 5.17%. That's for the NAFEM window, closing at 1,546 Naira to the dollar. Definitely a lot of seesaw movements looking at the price performance. That's for the Naira last week. But for NAFEX, we saw weakness there, down 2.84%, closing at 1,639 Naira. That was on Friday. So this week, we'll definitely be looking out for maybe more interventions from the CBN and see if there's more liquidity and maybe some strengthening for this week. But let's get to other stories now. We see the Securities and Exchange Commission. They've assured stakeholders in digital asset space that it is ready to provide the necessary guidance that will grow the industry, create wealth for Nigerians, and lead to economic growth and development. Director General of the SEC, Dr. Imamatomi Gama, stated this in Lagos over the weekend, said the Commission is willing to be patient in ensuring that majority of interested participants are carried along. The SEC DG said blockchain enables real-time transactions and settlement, reducing the time and costs associated with traditional financial services. He says this can lead to a more efficient and inclusive financial ecosystem, benefiting both individuals and businesses. And about 2 weeks after rolling out its first premium motor spirit, Dangote Refinery has recorded another major feat with the lifting of its PMS by NNPCL from the refinery located in the Bejuleki area of Lagos State. The $20 billion Lekki-based facility is equipped with 86 gantries, making it possible to load 86 trucks simultaneously. Minister of Finance and Coordinating Minister of the Economy, Mr. Wale Edu, led a federal government delegation to the refinery and is calling on domestic refiners to change the narrative and begin legal export of refined petroleum products. Our energy correspondent, Olu Phillips, has this report.
What a historic breakthrough day for all Nigerians. The last few months have been those of tensed moments, apprehension, and times when many residents became strict observers of events, analysts at other times, but ultimately united in one purpose: the yearnings for petroleum product availability. After months of work, the Presidential Committee, through its technical work group, finalized on directives from the President, Bola Ahmed Tinubu, on modalities to ensure a common operational space for the country's national oil company, NNPCL, and the Dangote Refinery company. This is the long and short form of the story. The Dangote team asked for two things: crude supply, and that crude be paid for in Naira. Those prayers appear to have been answered, courtesy of the federal government through the Nigerian National Petroleum Company Limited. Just as the coordinating Minister of the Economy is here to supervise the process, essentially and effectively, the NNPCL has commenced lifting of PMS out of Lagos, and it brings such joy to the refinery stewards.
Now, after 52 years, now we have a solution, and the solution is local production of PMS, and it is from a Nigerian-owned company, and as an EPC contractor, it was constructed by a Nigerian company. So it's a matter of great pride that a Nigerian-owned company, constructed by a Nigerian-owned company, is able to generate PMS from the local crude and deliver not only to meet the entire requirements of Nigeria, but we can also have surplus to export.
In the midst of the frenzy and monumental positive shift, we asked the team lead the question on your lips.
What Nigerians can look forward to is energy security, energy sufficiency, and as we look forward, we can also look at the issue of cost. What we're expecting that as this refinery and even others, as they ramp up production, ramp up scale, and achieve greater economies of scale, there should be the opportunity, and there is definitely the potential to reduce their costs, which should pass on to the consumer. So we have to give them a chance. They have just started. They have done very, very well.
One huge step is out of the way. And as the finance minister said, having delivered this, Nigeria is only part of global competitiveness, which again, of course, can only also happen when local prices are competitive. Olu Phillips, Channels Television News.
All right, yeah, so it's a historic moment for Nigeria, finally refining PMS within our shores. But there's one big snag now, and that's pricing. We've had statements upon statements, one from the NNPCL, giving us estimated pump price, based on Dangote Refinery pricing, and that's coming to about 950 naira per liter. And that's for Lagos. Then we have a statement also from the Dangote Refinery telling us to hold on, that they're going to give an official statement on this same pricing issue. So definitely, a lot to chew on there. But I'm just wondering who's thinking about us, the average consumer, that's having to deal with rising prices and now having to pay more for PMS. Then we have the central bank trying to tame inflation that's hit new highs upon new highs. But now we know the impact of rising PMS prices. We know how that impacts inflation. So definitely it'll be interesting to see what September inflation numbers will be. But we're still waiting on the MBS to give us what happened in August. That's talking about inflation. Maybe we might get that today, but it's a public holiday, so expecting that sometime tomorrow. So join us for the conversation. Now let's get a sense of how the foreign investors, domestic investors are viewing what's happening right now. Join us for this conversation. We have Mr. Farouk Khailan, is the CEO, Premium Africa Holdings, joining me via Zoom. Great to have you on the show.
Thank you very much, Ladi. How are you?
I'm fine, thank you. So, definitely we know it's a landmark event for Nigeria's energy sector, over the weekend, but I'm sure you've been following the story and you've seen, we're having a snag there when it comes to pricing, of the product. So, talk to me, give me a sense of how the international community, investors are viewing what's happening right here with Dangote's refinery. That's his investment journey, with this refinery.
Well, I think over the past couple of months, the international business community has been monitoring Nigeria very strongly, particularly what's happening in the energy sector. Energy security is something that is very, very crucial to Africa's economic development. Nigeria is Africa's powerhouse in terms of economics, and we all been monitoring it keenly. What excites us, particularly those of us wearing the Pan-African cap, is that localization of economies. We want to see that countries are looking domestically in terms of developing their economic fronts. Dangote has shown leadership. We are all proud of him. There's a narrative that 10,000 Chinese people have come into Africa and making over $1 trillion annually. So it gives us an indication that our economies are not owned by us. Dangote has shown leadership. We're excited that Nigeria has localized this very, very important component of the economy. Your Forex conversations will be changing now. We are monitoring how the inflation will look in September. Everybody is monitoring keenly. You realize that these transactions will be done in Naira. So nobody has to go and convert Naira to dollar to come and do transactions. And even when Dangote supplied NNMC, you realize that it brought the buying prices that they are always used to, significantly down. So indeed, you can understand that, yes, we are looking domestically. International investors are also looking where they can plug themselves in the value chain. After supplying the local economy, we understand that there's also surplus to be exported, where some forex would also come in. So it's a very, very interesting dynamic. We are very excited about it. We want to say kudos to the government, particularly His Excellency Tinubu. This becomes a success.
Right, and that perspective here, we're seeing a little snag there when it comes to pricing of the product. But with what you're seeing so far, does this inspire confidence in a foreign investor out there looking into Nigeria and saying, you know what, I'd like to plug in to some part of this energy market? Does this, with what you're seeing so far, does it inspire confidence?
It does. It absolutely does. Because if you look at the value chain of petroleum supply, once it's become localized, then indeed you also understand that logistics would also provide a very important opportunity for those who want to enter the space. Those who would also need capacity enhancement would also reach out to international community. The international community has always, investor community has always find it difficult to plug in. They say blessings can come in different ways. It's a blessing in disguise. Others have been at the doorway trying to find themselves in. And this one offers a very important, dynamic. So what you realize is that this logistics conversation will start happening. Those who see Nigeria as a powerful force would also start, expressing their interest. And then definitely it would all translate into more investments coming in. What excites me particularly, transactions will be done in the local currency.
Right, and talking about the local currency at this time, we've seen pressure on the naira, but some stability, somewhat. Some would say, oh, stability, weakness, two different stories at this time. But talk to me about we keep talking about attracting investment, bringing foreign capital in, FDI. We've seen it drop in the first quarter of 2024. So what are you seeing, when it comes to, attracting investments into, say, Africa, Nigeria? Is Africa well positioned? Is Nigeria given the right body language to attract even more investment, into other sectors of the economy?
Yes, you realize that when the baton changed hands, people were also very, skeptical, and not because they didn't have confidence in the government, but they wanted to see the policy direction of the government. This is a landmark, scenario where like Nigeria is localizing its petroleum. Yes, indeed, it would definitely impact the sort of decisions that investors are going to make. It inspires confidence, absolutely. If you look at the investment narrative, there are those who would also prefer that countries show muscle when it comes to driving their own, economies, showing leadership, and taking the economy to locals, indigenous entrepreneurs to be able to drive it. There are those who would try and look for Dangote and find a way to plug themselves in anywhere in the value chain, because there's always need for capital. There's always need for expansion. There's always need for, logistics. There's always need for technical expertise. And this is where the opportunities lie. So definitely you see a lot of, flights coming in from investors from different jurisdictions coming to understand the dynamics. And this is where government needs to be very proactive. Policy must be inviting. It shouldn't be ones that would drive investors away. It's a wonderful opportunity if you look at it. And I have confidence in the managers of the economy that the right decisions will be made. It looks a bit, clarity is not so much established, but as we continue to go, we'll fine tune, we understand where the challenges are, and government will need to be proactive so we can, ensure that we move at a very appreciable pace. So we are keenly monitoring what's going on.
Right, and looking at that enabling environment, we've been talking a lot about creating that enabling environment for businesses, but we see that with high inflation, we've seen the central bank have to keep rates really high. So talk to me about patient capital. You know, looking at a country like Nigeria, do you think patient capital will be looking this way?
Yes, there's a lot of patient capital seeking to come in. If you look at the Middle East, is showing a lot of they are mopping up a lot of interest aggregations in terms of bringing that sort of capital into Africa, and in this case, Nigeria. What patient capital likes to see is policy direction. And because it's looking at a long-term investment horizon, it is ready to go the long haul with the government. But in this case, like I keep saying, government have to show leadership. In terms of policy framing, it has to be more consultative other than hammer in the hand sort of approach. Government should continue to sit with Dangote, NMC around the table, fine-tune, continue to fine-tune, because to retain patient capital is heavily hinged on policy. So if policy is not showing that sort of, confidence on the investor community, is also going to, it won't go well. It won't be an attractive destination for investors. But like we always emphasize, patient capital is always policy aligned. They want to see what direction is going, because they have a window to make decisions. And then once they are seeing that, well, it's not going well, those decisions will be made. But in the long run, Nigeria is going to win, but it's all hinged on leadership. The managers of the economy, in this case, the central bank, also has to be very inventive, quickly keep going back to the drawing board. It shouldn't be casted in concrete. If there's any step of the journey that is showing to be creating some bottlenecks, some hindrances, we should quickly be able to modify these things so that at least we inspire confidence. Whichever sort of capital is coming in, it will be hinged on confidence, leadership, policy, and we're closely monitoring what the scenarios will be from now on.
Right. When it comes to Africa and Nigeria, we keep talking about attracting investment, bringing in FDI. But what do you think a country like Nigeria should be doing now so to get to a point where we don't have to always look for FDI and, looking for foreigners to always come and invest here? How can we, do things, from within? What's the short-term move for that and long-term?
Yeah. When we talk about FDIs, we should also not lose sight of the fact that there's a capital flight. Profits are repatriated back to base, and then eventually whatever gains has been made, the significant beneficiary is out of country. So what needs, like Dangote has shown leadership, we should create more Dangotes. It shouldn't just be centered around an individual or one particular company. We should find a way to bring other people to the table. Monopoly can. Those who are also talking against monopoly should come with, equity, should come with the right capital, the right mindset to show leadership. In terms of domestifying our economies, it takes individuals like Dangote. One Dangote is not enough. We need to see about 100 Dangotes in Nigeria. He has shown that already. We need people to look at his blueprint. And when those who want to get into the space, government should be able to welcome them. And probably even if Dangote will take Dangote to show them the way, mentor them, guide them on how to, be able to meet certain government requirements. We're missing out when it comes to capital retention. Profit flight, capital flight is a major concern to African economies. We keep going out there trying to attract the investment, but let's also look within. What you realize is that your best bet is local capital mobilization. Once you mobilize the capital in country, it stays in country, and then the benefits, those who make the economic gains are also in country. Whatever they spend, whatever they do, expansion, capacity building, it stays within the country. So, like, government policy should be welcoming to the local entrepreneur. It shouldn't be too, destructive when it comes to the local business person trying to get in the space. But like I said, we're inspired by what is happening. Government has seen that, yes, indeed, once they muscle out some leadership and build local capacity, is going to help the country in the long run. Inflation is disturbing. We want to retain our currency. We shouldn't, use our currency to go and chase dollars to do transactions. So all these things are very important. But I'm sure that the central government, the Minister of Finance, are inspired now to look within their country, to look at what direction, to go in terms of building local capacity, domestifying, the opportunities for Nigerians to get in the way. It's not just Nigerians, other Africans are also keenly monitoring on how they can come in so that it stays within the continent, the opportunity is shared, so that at least Nigeria shows the way when it comes to creating opportunities for Africans as well.
Right, and talking about creating opportunities, for Africans, we've seen, with this mega refinery, at the end of the day, pricing is still looking like Nigerians will have to pay a lot to get PMS at the pump. So generally looking at, the Nigerian consumer, the African consumer, we see all of these big investments, but with these big investments, we're still seeing poverty, rising. So how can we make it also, put the consumer, the average Nigerian African consumer, in the picture, how we can protect them? Even though we're getting most of these investments coming in, the policy from the government, how can it translate to cheaper prices for Nigerians and Africans?
Well, if you look at energy security across Africa, it's always been a challenge. When the prices at the pump goes up, it impacts every sector of the economy, right from food, right from everything else that we do is impacted by the price at the pump. But it's always been challenging. If you look at even Ghana, Liberia, Uganda, Kenya, it's always come up. And you find that economic managers are grappling with the idea, how do we solve this menace? How do we go a long way to find solutions to these concerns that is not really cutting it? Poverty is heavily high in Africa. If you look at the impact, even in Nigeria, these very exciting dynamics, it's not really changing people's situations immediately. It's a long term, and as decision makers, we should look at long-term horizon. And we should be honest when we're making these decisions. We should tell people these decisions that we are making, the impact might not be felt now, but in the next 5 to 10 years, you will see it. We should be honest about it. We shouldn't be making policies that are that will change our dynamics, that is very deeply rooted, and eventually it will happen. But if we keep on making decisions that seeks to impact what happens at the ballot and elections, then this is what happens to us. We don't make decisions for the long term. Once we keep making short-term decisions, our scenarios are never going to change.
Right.
Because you are
all right. So hopefully, with all of this, I hope at the end of the day, the average Nigerian and the average African wins, even though the big investments keep rolling in. Thank you so much. It was great having you, Mr. Farouk Kailan, is the CEO, Premium Africa Holdings. Thank you so much. Enjoy the rest of your day.
Thank you, Ladi. Great talking.
Thank you. Bye. I'll take a quick break now. When we come back, head straight to the markets. That's in a moment. Stay with us. All right, for the Treasury bill secondary market, traded on a bearish note. That was on Friday with many offers across the curve, with minimal bids that match those. But let's bring in Ladi Bello, head fixed income at Access Bank. Hello, Ladi. Great to have you.
Thank you very much for having me. Good morning.
Good morning. So what are you seeing? We did see low yields last week in most of those fixed income markets. Talk to me about investor sentiment and demand.
Okay, sure. Market liquidity improved towards the end of last week's trading session by about 88 billion to close the day in the red, negative territory of about 500 billion. Despite this, we saw OBB and overnight rates hover around the 31.5% levels respectively. So what we've seen last week is some cherry picking across the curve. Given the low level of system liquidity, we've seen most of the trades done at the belly of the curve, where we have the elevated yields on the February, March, and April 2025 papers. These were exchanged hands around the 19% levels earlier in the week. And then towards the end of the week, we saw these papers trend upwards by about 100 basis points to close around 20% levels. Well, in contrast, the bond market was a little bit more active. We saw some bulls come out into the market. We were supposed to have the FGN bond auction scheduled for today, but because it's a public holiday, the DMO decided to move it back. We scheduled now next week, one day. Monday. And as a result of this, we expect to see a little bit more buying ahead of these auctions above the 20% mark.
All right, we'll definitely be looking out for that. But what are you seeing for this holiday shortened week?
Please repeat that.
What are you seeing for this holiday shortened week in the market?
Okay, so we expect to see fairly improved system liquidity levels as some of the coupon payments come in to affect the market liquidity this week. But by and large, we expect to see continued bullish sentiments across the bond curve as market expectations imply that the yields will close significantly lower than where we saw the previous auctions levels. At the last auction, we saw the most interesting and highest yielding bond in the market, the May 2033 papers, trade around 21.5% levels. And right now in the secondary market is trading just above the 20% mark. So we expect to see that filter into the bond primary auction next week, Monday, where we will see slightly reduced yields across the bond curve.
All right. Thank you so much, Ladi Bello, Head Fixed Income, Axis Bank. Thank you. All right, now let's get a check on what happened, what played out in the equities market last week. 97,456. That's for the all-share index points, up 1.06%. That's the trade for the week. So again, compared to the previous week, let's look at the trading activity. Was a little bit subdued with value in the red. Deals just 50,615 lower compared to the previous week. Volume 2.58 billion units of shares traded. That's bigger than the previous session. Then if we look at the sectoral performance, it was all green, showing full-on bullish investor sentiment. 5.12%. Financial services, that's a banking counter. That's taken a bit beating for a while earlier this year, but now we're seeing a big recovery. Consumer goods 1.47%. Then we see oil and gas counter also giving a 2% rise. Let's take a look at some of the top trades. That's for last week. We see financial services again topping the counter with Jai's Bank PLC, Zenith Bank PLC, topping trades by volume, and we also have Japol Gold and Ventures PLC. So as I said before, the holiday shortened week remains to be seen how investors play in this 4 days of trading that's starting tomorrow. So I'm going to hand things over to the Sunrise Daily team, but before that, this commercial break. Do stay with us.